So for 3 years during my mid-20s, I got asked to travel and speak a lot of different places to share how I went from 0 to 87 apartments by the time I was 23 years old. But during my travels, I noticed a very unfortunate pattern, which is that out of hundreds and thousands of people that I would see on a weekly basis, maybe 1 out of every 100 person was actually going out and finding good, solid deals. Now, eventually, after months of experimenting and figuring out what was actually wrong, I figured out a formula that helped hundreds and if not thousands of people around the country find amazing deals and become financially free real estate entrepreneurs. And that's the formula that I'm going to share with you today in this video. And I hope you guys do this in 4 easy steps, which, that being said, step number 1 is learn. Now, before you guys start clicking off and be like, oh my gosh, he's like every other YouTube influencer. Here's what I'm not saying. I'm not saying to learn everything, because oftentimes when you try to learn everything, people end up doing nothing. Trust me, I know. But here are the things that you do need to learn. So I'm actually going to pop them on the screen for you. And some of these things include underwriting fundamentals, which you guys want to check out a great video on it. I'll put it at the end of this video on how to calculate rental properties like a pro. Other stuff like how to research the deal and the market. Weekly and daily rhythms, which we're going to talk about in this video as well. Being familiar with basic real estate investing terminology and how to run financials on a deal, and sales tactics to raise capital the right way. In my opinion, those things are the right information that you're going to need to be able to successfully complete and find a real estate deal. Now, all that being said, the question has to be asked, well, what are we learning all of these things for? Because at the end of the day, if money is not actually hitting your account and you're not doing deals and you're not acquiring rental properties that are cash flowing really, really well, all of these things just don't matter. So this is what leads us to step number 2, which is to create your strategy. Now, when I say strategy, I'm not talking about just the how or what you do. This is the who, what, when, where, and how of your real estate investing career. And again, the reason why so many people fail and don't end up acquiring rental properties and don't end up becoming financially free is because they try to learn everything, to do everything, and because they do that, they get nothing actually done. Most amateur real estate investors will just talk to brokers, or they'll just try to go on Zillow or go on Redfin or go on LoopNet or any of these public platforms to try and find the right deals. But what they don't know is that a lot of times guys like me or other seasoned real estate investors with a lot of resources and a lot of team members and people usually have gotten through those deals first, have said no, and says, all right, we're just going to give the scraps to the people who don't know what they're doing. And unfortunately, because of it, you have a lot of brokers and realtors who will try to persuade newbie rookie investors to get into deals that they have no business getting into. So how do we prevent that? Well, we prevent it by creating a strategy, being very crystal clear on, again, the who, what, when, where, and how of what we're doing in real estate. So let me give you an example. When I first got started in my real estate investing career, I spent 3 years spinning my wheels, just reading books, listening to podcasts, buying programs, spending a lot of unnecessary money, going to seminars and meetups and all these different things. And finally, I had somebody who I really looked up to at the time sit me down and kind of go, hey kid, you have to focus on being a sniper and not a shotgun. When you're a newbie and you don't know what you're doing and all you're doing is just spraying the room and you're just going shotgun after shotgun after shotgun, it's going to be very hard for you to focus on one thing. And unfortunately, for a lot of you guys that maybe have a 9-to-5 job, or maybe you're in school, or maybe you're watching this video hoping that real estate will be your vehicle and avenue to get some of your time back, right now you don't have a lot of time and money and resources to work with. So we have to go sniper rifle approach, because we only have 1 bullet versus trying to shotgun everything where you may have 10, 15, 20 bullets come out at the same time. Hope that makes sense. So here was my strategy when my mentor sat me down and said, hey kid, you gotta be a sniper. So what I was specifically looking for, and when I figured this out, that's when things started really happening for me, was I was focused on 8 to 20 unit multifamily buildings that were B and C class, which, by the way, for those of you guys that don't know, apartment classifications are A all the way to D, which pretty much just means your class A are super luxury, high end with pools, workout centers, and saunas. And your D is pretty much, think of like O Block in Chicago. So when I say B and C, it pretty much just meant stuff in the middle. So my what was multifamily buildings between 8 to 20 that were in the middle of the road when it came to conditions. My where was the suburbs of Chicago. My how was actually buying properties through what's called seller financing, which at the end of the day is just having the seller carry the mortgage and not the bank. And because of that was my how, my who was actually looking for older retired landlords who were more in a position to do seller financing in the first place. And my when was 90 days after I created that strategy, because for me, I realized I needed that 90 days to not only do some more research on the areas that I was looking at that I finally decided I was going to do business in, the asset, but also recruiting investors who would actually help me put the money into these deals, because I was a broke college kid when I first started real estate and I had no money.
So you're broke.
Now, it took me 2 weeks to figure out what my strategy is because of all the reading and the conversations that I was having with different investors. But after I got that strategy completed, which led me to step number 3, which is establishing your channels. Now, when I say channels, I'm not talking about like CBS, NBC, or ABC. What I define as channels are the ways that you're going to find properties. Because as I mentioned in the beginning, what rookie investors will do is that they'll just try to look for anything, right? And when I ask them what type of deals you want to do, they'll kind of just say, I don't know, I just want the ones that cash flow, right? That's like the equivalent of you dating somebody and me asking, hey, what type of girl do you want? Or what type of guy do you want? And they're kind of, I don't know, somebody who's between 5 foot and 7 foot and has a pulse, right? It's very foolish to think of it that way, right? So it's to establish your channels, which is asking yourself the question, hey, based on your actual real estate strategy, the who, the what, the when, where, and the how, what are the most ideal ways for you to find those types of buildings? And one of my favorite things that I love telling people, our students or clients around the country, is when you're looking for deals, stop looking for properties, look instead for people. Because at the end of the day, we do business with people. We don't go up to apartment buildings and hug the brick and go, oh my gosh, you're mine, right? We don't do that, right? Unless you're one of those people, which knock yourself out, right? But we establish those channels. So for me, going back to my example, mine was 8 to 20 unit buildings, B2C class, seller financing, and my who was older landlords. So for me, I got to thinking, what are the best ways to target older landlords? Now, if you are in the older camp, this is no disrespect or offense to you, but most of the time, older individuals tend to lack technological skills, right? And again, no disrespect or no offense to you. If you feel offended, you can put in the comment, you can't drive, right? There you go. We're even now. But we have to establish your channel. So what I did was I asked myself, okay, how do I find older landlords? Well, since they're technologically maybe not as advanced, they're probably not going to put their listings on sites like Zillow, Redfin, unless they're working with the broker, which for me, I didn't want to. I wanted to find properties that were off the market. I wanted to have deals and access to assets that nobody else had access to, because I knew if I wanted to find properties off Zillow, Redfin, or LoopNet, well, I was competing with everybody else. I was competing with the public market, and I wanted to put myself in a position where I don't have to compete, but I could just more so dominate, which is what I want. So the 3 ways that I would find people would be, first and foremost, newspaper ads. Now, I know what you're saying. You're saying, hey, Daniel, this isn't 1860s. You're not going to put up newspaper ads, and if you want to sell your building, right? What I was doing instead is I would look at newspaper ads for units that were up for rent, and I would call the for rent ad, and I would ask the landlord, and sure enough, most of them would be 60 and older, and also sure enough, most of them owned the building outright, which meant I could go with my how, which was seller financing. So I would call the newspaper for rent ads and ask them, hey, would you be interested in having a conversation around selling your property? So that was option number 1. Option number 2 that I did was I would call for rent signs. So very similar to the newspaper ads, I would spend about maybe 3-4 hours every Friday or every Saturday morning, just at least once a week. And I would drive around and I would call these for rent signs that were out in the front lawn, especially if these buildings fit my criteria. And I would say the same thing. Hi, my name is Daniel. I'm a local real estate entrepreneur. I just wanted to see if you'd be willing to have a conversation around maybe selling your property. And some said yes, some said no, some cussed me out, right? But it's part of the game. So newspaper ads, for rent signs. And the third thing that I did is I started building relationships with older property managers, because a lot of these older property managers had been in the town, had been in the industry for 10, 15, 20 years. One of the biggest barriers to entry that entrepreneurs on the internet will say, it's just the good old boys network. Well, there's ways you can take advantage of that. There's ways that you can have it be to your advantage, which means if you build a really great relationship with one person in the good old boys network, if you make a great relationship with one boy, then you'll get all the other ones, right? So I would build property management relationships and I would make an arrangement. Now I'd say, hey, how would you love to have a scenario where you never lose any business? Because in fact, next time you have a client that wants to sell, and chances are because they're an older property manager, most of their clientele were older. At least that's been my experience. And I would tell the property manager, hey, if you have a property management client that wants to sell, well, have them call me first. Because then what I'll do is I'll buy the property from them and keep you as the property manager. Since you already know the building so well, you've been managing it for this many years, and you have all the real documents and financials, which saved me a lot of time and headache, because then I didn't have to worry whether or not the seller was lying to me, because I had the property manager on my side giving me the real numbers. And I was also able to know if there were any headaches that were coming ahead of me, like any issues with plumbing, electrical, any big maintenance issues, any issues with the foundation or the actual structure. So all in all, it was a huge advantage to me. Now, this is what leads us to step number 4, because all of this means absolutely nothing if we don't have consistency, which is why step number 4 is to form KPIs. Now, KPIs, it doesn't stand for Kentucky Pressed Individuals, right? That was really random. Sorry about that. But KPI stands for Key Performance Indicators. Now, a lot of you guys may have heard these before, but in business, there are two things. There are leading indicators and there are lagging indicators. Now, lagging indicators are a result. They're, hey, I want to lose 30 pounds. That's a lagging indicator. That is a result of what happens if you do your leading indicators, which are, I'm going to go to the gym every single day for at least 45 minutes. I'm going to do cardio for 3 out of the, I'm going to keep my diet to sub 2,000 calories, right? These are things that if you do them and are consistent, you will, yes, achieve your lagging indicator. And on a side note, the reason why 90% of Americans don't accomplish their goals, especially New Year's resolutions, is because we spend 90% of our time on lagging indicators and not leading indicators. And this whole process, steps 1 through 4, is all about taking a sniper rifle, crystal clear approach on what your channels and eventually your habits and KPIs need to be. So for me, what I did is I took those channels, which was newspaper ads, calling for rent signs, and also building relationships with older property managers, and I turned them into weekly habits. So going back to my example, every Saturday morning for 3-4 hours, I would drive around calling for rent signs, KPI number 1. And then on Thursday morning, I would take the newspapers and look at all the for rent ads, and I would see, okay, make a list, okay, who do I need to call, right? KPI number 2. And finally, KPI number 3. I would make myself go to at least 1 or 2, minimum of 1 though, per week, networking real estate event, whether it's a RIA, whether it was a meetup or something, or if I would just cold call somebody, if there was an event that week, I would just simply Google property manager or ask around. I would ask my banker or my attorney or another investor in the area I was doing business in, and I would ask them, hey, do you know a property manager that's been doing business here for at least 15, 20 years that I can connect with? So I would have at least one event or at least one form of outreach to my third and final KPI, which is building relationships with older property managers. And I stayed consistent. I did it for an entire year. So I started on January 1st of 2017. My goal was to get 20 doors. And because of my consistency in my KPIs, which by the way, didn't really take a whole lot of time. The newspaper thing took 30 minutes. The calling for rent signs took maybe 3.5 hours, 4 hours max. And then the outreach or the networking event. So if it was an event, it'd be 2 hours. So at most, I was spending maybe 6-7 hours a week, which by the way, is not as much as you think it is, at least right now. I mean, in fact, if you guys looked in your calendar, we could probably find 6 or 7 hours. But because of my consistency with those things throughout the year, by December 31st of 2017, I ended up having 87 apartment units that I controlled and owned and giving me cash flow every single month. So hopefully this was helpful. If you guys have any questions, please put it in the comment below. Now, if you guys want to learn how to analyze a rental property like a seasoned pro, check out this video in the end screen here.